anything before like, well, looks like 403 were Samantha's requests, I guess.
Yeah. Um, but you know,
All right. Well, I might as
if
well.
you wanna comment on any of those too, you're welcome to. I'm sure.
Okay. Thanks, David. I appreciate it. Well, thanks for inviting me, David, and welcome everyone. I guess I'm bringing up the rear of the show today, and at 4 o'clock. Well, everybody's probably a bit exhausted, but it was an interesting day to say the least. Uh, the first thing I want to show you is my daily uh, March S&P E-mini contract. And the reason I want to show it to you is because every one of these little red arrows here, this is a daily chart. Every candle is a day, and it goes back several months. And here it says hotter than expected CPI, which was this morning. But all these little arrows show two things that are really interesting to me, and maybe to you too. This green moving average is a 100-day simple, and the black moving average is a 20-day simple. And 1, 2, 3, 4, 5, 6. So this is the sixth session in the last 13 that the S&P started the day below either or both of the upsloping, pretty much upsloping, 120-day MAs. And each one of those days after dipping below it, the S&P closed above it. That is the E-mini S&P. Today included, this was the spike down into right after CPI, and this is where we are right now. So let's see. I have my picture in front of me. So so the 20-day MA is at 60.7243, and the S&P, the E-mini S&P right now is at 60.74.5. So for all intent and purposes, it's come back, I guess 50 points for sure, maybe more. But the important thing is that every one of these spikes, which was pretty much on news, this was the DeepSeek low. This was the tariff announcement on another Monday morning. And these are various blips. Today was CPI. Each one of them has been a buy the dip opportunity. And today, what was fascinating was, if I can change pages here before I get to questions, uh, uh, what was fascinating today is that the bond vigilantes were out in force, and they took rates up. Now, I haven't looked at it in about an hour, so let's hope it loads pretty quickly. But anyway, last I checked, we were pushing like 660 maybe, and uh, and the bond vigilantes had their way with the bond market today, taking prices down, yield up on a 10-year, and the S&P held up pretty well, I would say. So either the bond vigilantes are overreacting, or the animal spirits and whatever's coming down the pipe from the Trump administration is. So here we were 463. I don't know if I said 660. I meant 460, but we ended up at 464. So this is the spike for the day on the upside. Now, it looks to me as though this started a new up leg after pulling back to support last week into the jobs report. That took you down to 440. This is a very dangerous chart to me. And if it gets over 5%, I think we could go a lot higher, not just a little higher. And the reason why I think that is because of this chart. This is my monthly 10-year yield chart. If we come out of this goes back to 2001, just to here. So there's an awful lot of momentum on the upside to take out, 5%, 5.25, and then we're off to the races. What would make that happen? Well, I suspect that animal spirits, we're going to, supposing we grow at 3.5%, 4% or more, or supposing inflation does ratchet up because of growth and productivity comes down. I don't know, there are all these combinations. But that bond market right there, this yield is telling me we have ended a 40-year bear market in bonds, and we're in yield. We've ended a 40-year bear market, and we're in the, I hate to say it, but the early innings of a 9-inning game of higher yields. So life is going to get interesting. Anyway, okay, let's get back to why we started here today. Okay, SKYW. Okay, so this is what we're going to do. So I have all these chart pages that are already set up, similar to Samantha, and you'll see one in a second. So for instance, I have reams, pages and pages of charts like this that are highly annotated and deal with my analysis on an ongoing basis. But just to put up a chart that I've already annotated for you is probably less than what you signed up for today. So this is what we're going to do. We're going to go over to my webinar chart page, which on which I have monthly. No, this is daily, 240-minute or 4-hour. This is the hourly. This is the 15-minute chart, and this is weekly and monthly. Just so happens I have snow up here, but we're going to put Skyworks up here. And let it all fill in. And we'll take it one at a time so we can get a feeling for, now I call these concentric chart. This is concentric charting. That is to say, you can go from the minutia minute chart up to monthly, and you can get an idea of how the stock or the market or the index sets up. I happen to do it the other way around. I take the big picture. Well, let's do the very big picture. That's the daily. So this is the monthly chart of Skyworks. And so to me, well, you can see it's a powerful uptrend. Now, what I have tracking it, which looks like a very tight fit, this blue average is the 8-month exponential moving average. And to me, every time it broke it by the end of the month or whenever the month closed, it had come back above it. So if you're a trailing stop trend trader, and this 8-month trailing moving average, exponential moving average, which is at 99, let's call it 100. Unless it breaks 100, you have no reason to bail out from a price perspective. From a momentum perspective, it's a different story, because this is a warning signal. And that is to say that this month, which was the end of November, is when price peaked, and price made a new high, but momentum has made successively lower lows, or I should say 2 lower lows so far in the successive months in December and January. So this is a warning sign that if there is a top that is being formed in Sky, then it's forming now, and you could, the stock is up enormously. So let's call it 135, and it was November of 22, 2 years ago. It was $15 roughly. So you're up 800%, and it stands to reason that anybody who's long here will need one of two things to have happen to stay in it, based on this particular view. And that is, from my perspective, you need a new calibration, a new bullish calibration. You need something to come out of this company that will calibrate why the market should still be bullish and more bullish, kind of like May of 23. May of 23, in NVIDIA when it came out and recalibrated the entire chip making industry. That's what you need with this. Or you need it to take off and make a new high and this momentum to confirm, which I don't think is going to happen. Okay, so quickly, that's the monthly. This is the weekly. And so now you have the weekly chart, and I look at it in conjunction with the monthly. And let me get my picture out of the way here. So it too is showing me that it peaked back here, then it spiked higher, and on lower momentum, it too was warning me. But from this perspective, a weekly perspective, let's put some trend lines in here. It's right on a trend line now. So if it breaks 106, let's say, then remember from the prior chart, 100 was the level. So breaks 106, the weekly is going to give you the next signal. Then we can go over to the daily and look at that. And where are those numbers? So here's 100, 99 to 100 is where the 8-period monthly exponential monthly MA is. So you can see where that is, and that makes sense. That breaks there, it's over and out. 106 is right in here. And that would be where the 100-day moving average is. So Sky is coming into some really serious support that needs to hold to preserve this bull move from November of 22. And then just so my methodology is complete, here's the 4-hour chart. And I use the 4-hour chart as to gauge trends and also momentum on a trading basis to see how it trades. Now it held this trend line today. So 106, 107 is a key level that's reinforced on the 4-hour that we saw in the daily and the weekly. Okay, so that's Sky. I'd be really careful in Sky. In fact, I think they're probably, if you have a big profit here, I know the tax consequences are dramatic, but I'd either sell calls or otherwise protect yourself in this one. GAUZ. Well, this will be a first for me looking at GAUZ. Okay, let's go over to the monthly. Oh, well, this is looks like, am I mistaken? Is this kind of a new issue? Well, it sure looks like it. So let's go to something that we can get sink our teeth into. All right, let me widen this out. This is TradeStation. I noticed that Samantha was using TC2000. I use that as well as a backup or as an addenda. And I also use stock charts for other things, which we can get into later. Anyway, so here's the daily chart. And on the daily, I use most of the time I use 10, 17, 50, 100, 200 day moving averages. And there are short-term averages in there, intermediate, longer term. And the confluence or the juxtaposition of those averages tell me a lot. I've been doing this for like 40 years. So according to Malcolm Gladwell, who says you need 10,000 hours of practice on something to be an expert, I've done definitely more than 10,000 hours. I've taken many more than 10,000 foul shots, so to speak, more than 10,000 first serves that I think were in the box. So anyway, I consider myself an expert in chart analysis, in pattern recognition, is what we'd say. So anyway, in this case, here's a 50-day MA, which is right here. It's at roughly $10. And where and GAUZ is leaning on that now. I wouldn't like to see that break, because here's the 200-day at 950. There's a gap here that's not filled, and that gap would be filled at 850. So breaks the 50-day. This looks like to be the first up leg, a first completed up leg of a bull phase. In which case it's correcting now. And of course, most of you would put a Fibonacci retracement on there. And not only are you at the 50-day in GAUZ, you're at the 50% retracement. So if it breaks, chances are you're going to the 200-day. And once at the 200-day, the magnet on the chart would be to fill the gap at 850. In which case, then I would seriously start looking for this name to bottom and to go into the next up leg. Okay. QQQ. All right. Let me, I think I'm going to load, while I'm talking, I'm going to load my QQQ chart, because there's a lot of work on there that you probably would at least appreciate seeing. It's not on there. Okay. All right. So these are all my programs. Okay. All right. Let's hope this this loads quickly, because the QQQ is a thing of beauty, and it has managed to hold up against, well, every spike, every announcement, against Tesla coming down. Of course, Meta is going the other way, remarkably. I thought 720 was going to be exhaustion for Meta, but now that it's firmly above it, now there are new upside targets. Okay. All right. So here is my 4-hour QQQ chart that goes back to October 23. And this is where QQQ closed up on the day. Now, this is such a beautiful channel. And since the middle of December, which is pretty much 8 weeks, it's been trading in a range, in this range. Now, this range is either will morph into a top, or it will turn out to be a bullish digestion period and pattern atop this uptrend. Right now, as you can tell, it's not every time it comes down, it holds at a higher level. I happen to think that the January 13th pullback low to 499.62 off of the all-time high at 539.15, I think that was the end of a pullback, and all the rest of this is a digestion pattern that will resolve itself to the upside. Of course, to do that, I need to see it, 532, 534 to take off. But unless it takes out support 518, 514, I have no reason to be short. No reason to be short. And I have every reason to stay long QQQ. One other thing I want to show you that I've played around with is cycle work. Well, that's not it. And you have to be really careful with cycle work, because when you least expect it, the cycle disappears and it morphs into something else. However, sometimes they stick around, like this one. So this is a 3.7-year low to low cycle. and I can enlarge the chart. It goes all the way back, years, decades. And if this particular cycle that started in October of 22 is true to form, let's say, we are in we've done, this cycle is about 73, 74% complete. And a lot of the cycles don't peak until 80%, sometimes 90%. And then the last 10 to 20%, you have some serious downside. Now, the cycle says that in October of 2025, which is, that's October is the 10th month of the year, and we're in the second month. So that's 8 months from now. So if, for argument's sake, this peaks 20% with 10% left, or 20, let's say 20% left, we're not looking until May, June for a peak. But you always have to, this just informs me that if this cycle is right, we're running out of time for the cycle to exhibit tailwinds for the QQQ. So just like the 4-hour chart is telling me that it needs to break 514, should it do that, that would be the first shot over the bow that tells me that this cycle work is getting more acute. This is 514 here, right in here. That's the first sign. If it breaks, obviously, if it breaks through 500, that's a second sign, and 500 is down here. That's when it takes out the 50-week MA, and things start to look much toppier than they do now. So anyway, the cycle work informs me just where we are in some time frame that has seen periodicity in the past, and it's a warning signal for me that QQQ will be getting much frothier and much more dangerous and go into a bear phase. So every one of these cycle lows, you saw some intense downside based on, relative price moves compared to the prior upleg. So anyway, that's what I think of the QQQs. So I'm glad I was able to share that with you. Okay. Oil. All right, let's go back to the webinar charts. Let's do oil. All right. All right, now, Conoco. Let's go from longest time frame to shortest. Okay, well, this is a massive uptrend from, the pandemic low of 2020. It's the first down leg, the first corrective down leg. This is the second corrective down leg, and we're in the final corrective down leg of what looks to me like an ABC correction. And I would think that we have a little bit further to go, unless that is to say somewhere, 86 to 90 wouldn't surprise me in Conoco, unless it took out last month's high being 106 and change, 106.17. So Conoco, to me, on a big picture, looks extremely bullish in a correction, has probably another 4, 5, 6% to go before I think it's would appeal to me as a powerful buying opportunity. Here it is on a weekly basis. First leg, intervening rally, second leg down. It should unwind into here. Prior support, going back on a weekly. Let's see, 85.77 in there. So if you're looking to, on a longer term basis, intermediate term basis, looking for the next, back up the truck opportunity in Conoco. That would be my guess, unless it held here at 90. But it doesn't look like this pattern is in any mood to hold. If it comes down here again, let's say this week, next week, well, more like next week, and holds its prior low here at 94 and rips up, takes out, I would say the 104 to 106 area, then we have to reevaluate what's going on here. And to me, that would mean that Conoco is not, it's not starting a new up leg. What it is doing, it's traversing a range rather than taking off. So in other words, it would, if it came through here, maybe it'd go to here, come back down, and it'd be a large coil that will break out to the upside down the road. I would say we're looking at June, July, August, if that's the case. On the other hand, if it comes down here, then I think you have to buy it when that happens, or you have to consider being long when that happens. All right. PLTR. Oh boy, I knew I was going to get that one. Let's see. Let me go to my Magnificent Seven chart page, because don't do that now. I don't need it to back up my PLTR. So these are all the charts that are in this PLTR daily. Okay, so this is such a beautiful chart. All right. Can't even fit it on here. That's how beautiful it is. Thank you. All right. So PLTR, intermediate term. So this is a massive base it broke out of. The objective off of the base was about $80. So it's definitely taken that out. And that was earnings. This is what I meant before on Skyworks. Well, it needed to be, there needs to be a recalibration of what is bullish that's driving the stock to make it do this. And this is an NVIDIA kind of explosive move. So now what? Well, it's hard for me to be long up here, or to get long up here, or to get longer up here. So there's this massive gap in here that at some point will be filled between 100 and 85. My suspicion is that Palantir is now exhausted, and somewhere between 120 and I would say 106, 107, it's going to form a top or some sort of high-level digestion period. If that's the case, then let's go over to the other page and see what that might mean on a 4-hour chart. So here's Palantir. And it's this most recent up leg that we're interested in. Do we see a reason for it to run out of gas here? To me, it looks like it's very close to exhibiting exhaustion behavior and exhaustion conditions up here at around 120. Maybe it makes a new high, 123, 124. So with that in mind, if you're looking for a stop, and when this thing peaks, stops aren't going to be, one day there'll be some sort of news item that will take it down through here, and the next thing you know, you'll be down here. So anyway, I'm thinking that the risk up here is 123, 125 on the upside versus 190 versus 90 to 85 on the low side. So the risk reward up here obviously isn't great. I'd be really careful. I'd be selling calls, protecting yourself, and looking for around 90, if not 85, somewhere around there to re-enter, reallocate, to get long again. All right, let me do Bitcoin, and then we'll call it a day because I don't want you to, let me see if I have, where's my Bitcoin chart? Here it is. So let's see. I have to put up the Bitcoin chart. Share. Okay, do you see Bitcoin? David, are you with me?
Yeah. Yeah, I see it.
Okay, you
Yep.
see Bitcoin? Okay, good. All right, so this is my 4-hour chart of Bitcoin. It goes back quite a ways. Let's see, it goes back to fourth quarter of 23. All right, so this is what I think of Bitcoin. This to me is a bullish digestion period. 108, 109 is where we peaked. As far as I'm concerned, this 89,200, 91,100, those pullback lows. This was the tariff low was 91.1 on the second of the month. To me, I think that this is a bullish digestion period and pattern, a top 90,000 roughly, and Bitcoin will take off. It needs to get above 102,500 to start to accelerate to the upside. I think it rips through there, and the first target would be 110 to 112, which is not a major up leg, but that is where I have my first warning sign around 112, and that's where I'll be looking for signs of exhaustion off of this digestion. However, let's keep in mind that this digestion goes back to November, so there's several months of combustion here. So I'd be surprised if it peaked at 112, but that's where I have my next signal to look for turbulence. If not, it goes to 125,000 to 130,000. Now, until it breaks above this 102,500, there's stuff at 101, stuff at 100,000. However, as long as 89, 91,000 contains weakness, I'm a Bitcoin bull for another up leg. I mean, it could be a lot more than this because these legs, these consolidations were enormous, and the explosions out of them have not been fulfilled yet on a upside potential basis. David, I think I could go on for another 2 hours, but I think we'll have to schedule another session.
Yeah, definitely will have you back next
So,
time.
so people can find me at MP Trader, M like Mike, P like Peter, mptrader.com, and this is what we do all day. Talk about these charts. And David, thanks for having me.